Have you ever noticed how ridiculously expensive homes have become these days? You know, they say buying a house is one of the biggest decisions you'll ever make in your life. And trust me, they're not kidding. It's not just the upfront purchase cost that can make your jaw drop. It's the ongoing and sneaky hidden expenses of home ownership that can sneak up on you if you're not prepared. So today, we're going to dive deep into the real cost of owning a home. Welcome to the Finance Virtuoso channel, where we talk about all things finance. If you're seeking a daily dose of valuable information on money, business, investments, and savings, be sure to click the notification bell and hit the subscribe button now. Let's start by peeling back the layers on the first significant aspect of home ownership cost, and that's the upfront expenses. Upfront costs. The first and typically the largest upfront expense when buying a home is the down payment you have to make. Usually, it's recommended to set aside 20% of the home's purchase price for this purpose. If your down payment is less than 20%, you'll likely need to pay for private mortgage insurance or PMI. PMI can cost anywhere from 0.5% to as much as 2.25% or even more of your initial loan amount each year. Essentially, PMI acts as a safety net for the lender to protect themselves in case you can't make your mortgage payments down the road, preventing them from losing the money they lent you to buy the home. Let's break it down with an example. Imagine you're purchasing a $330,000 home and you decide to put down just 10%, which amounts to a $33,000 down payment. In this scenario, you could anticipate an additional monthly PMI expense ranging from $125 to $555. Now, let's look at the bigger picture. Suppose your mortgage is set for 30 years with a 4% interest rate. You might find yourself making PMI payments for approximately 6 to 7 years, totaling anywhere from $9,000 to $46,000 in PMI payments. However, it's important to recognize that because your initial down payment was relatively smaller, the loan amount itself is larger. Consequently, over the course of that 30-year loan, you can end up shelling out an additional $8,000 to $9,000 in interest payments, over and above the PMI. This is certainly an aspect worth taking into account. The second upfront expense of home ownership is the closing costs associated with buying the home. Closing costs for buyers encompass a lot of things, and not every buyer will have to pay for all of the fees, as some of them are only relevant in certain situations and others can be negotiated. Just to give you an idea of a few things you might see, there are costs associated with the mortgage loan itself, including a loan origination fee of about 1% of the sales price of the home. Additional costs also involve escrow account funding, typically covering property taxes and insurance, discount points, application, and appraisal fees, as well as prepaid interest charges. Don't forget to consider costs associated with titles, including expenses like title search and insurance. You may also encounter attorney, recording, or notary fees, inspection and appraisal costs, and escrow and HOA transfer fees. On top of that, commissions for real estate agents can add up, typically around 6% of the home sale price, though negotiable, and there are miscellaneous junk fees. A general rule of thumb is to budget 2% to 5% of the home's purchase price for closing costs, which for a $330,000 home can amount to $6,600 to $16,500. Ongoing costs. Owning a home also involves ongoing expenses that you need to budget for. These include mortgage payments, maintenance and repair costs, remodeling and home improvement costs, property taxes, homeowner's insurance, and utilities. The mortgage payment is the most obvious and regular expense of home ownership. It consists of the principal, which is the amount you borrowed to buy the home, and the interest, which is the fee you pay to the lender for borrowing the money. The amount and frequency of your mortgage payment depend on the type and terms of your loan. Maintenance and repair costs are inevitable when you own a home. You have to keep your home in good condition and fix any problems that arise. Maintenance and repair costs can vary depending on the age, size, and condition of your home. But a general rule of thumb is that you should expect to pay anywhere from 1% to 4% of the value of your home every year on these costs. Remodeling and home improvement costs are optional expenses that you may incur if you want to upgrade or change your home. These can include things like painting, flooring, landscaping, or adding new rooms or features. Remodeling and home improvement costs can vary depending on the scope and quality of the project, but according to a study, the average household spends about $7,560 a year on these costs. Property taxes are mandatory fees that you have to pay to the local government based on the assessed value of your home. Property tax rates vary from place to place and can change over time. They usually fall in the range of 0.25% to 2.5%. You can often get a general idea of your local property tax rates by looking at a calculator online. Homeowners insurance is another mandatory fee that you have to pay to protect your home from damage or loss caused by fire, theft, natural disasters, or other hazards. Homeowners insurance rates vary from place to place and from home to home, depending on how much coverage you want and what deductibles you're willing to have. A general rule of thumb is to expect to pay roughly 0.5% of the replacement cost of your home per year in insurance. Utilities are the final major ongoing cost associated with home ownership. They include things like electricity, gas, water, sewer, trash, internet, phone, and cable. Utilities can vary quite substantially depending on how energy efficient your home is, the time of the year, and the habits of the people living in the home. According to a study, the average household spends about $2,060 a year on utilities. Hidden costs. Finally, let's uncover the often underestimated world of hidden costs in home ownership. Missed investment opportunities. This concept underscores the financial trade-offs you make when choosing to invest in a home rather than exploring alternative financial avenues. When you invest in a home, a substantial portion of your savings becomes tied up in the property. This means you miss out on potential gains from other investments, such as the stock market. Let's consider an example to illustrate the concept. Suppose you allocate a considerable sum of money for a down payment and closing costs on your home. Over the years, your property appreciates in value, say, by 5% annually. However, during the same period, if you had invested that same money in the stock market, you might have seen returns averaging 7% per year. This discrepancy represents the missed investment opportunity cost of home ownership. While homes typically appreciate in value over time, it's essential to weigh the opportunity cost of your investment. In the example, the appreciation of your home's value didn't match the returns you could have earned through alternative investments, demonstrating the real cost of missed opportunities when investing in a home. So, should you buy a home? From a purely financial standpoint, does purchasing a home make sense? Well, the answer isn't one size fits all. It greatly depends on your individual circumstances. However, even if the financial numbers don't align perfectly, there are compelling reasons to choose home ownership over renting, particularly for the right individual. The reality is that many people can enjoy substantial lifestyle improvements by transitioning from an apartment to a house, and these benefits might outweigh the cost disparity, even if home ownership in their region is more expensive than renting. In conclusion, understanding the true cost of home ownership goes beyond the initial down payment. It includes upfront costs, ongoing expenses, and even hidden opportunity costs. While owning a home can be expensive, it can also provide significant lifestyle benefits for those who choose this path. What do you think about home ownership? Comment your thoughts down below. And if you found this video helpful, please give it a thumbs up and subscribe for more money-related content. Thanks for watching, and we'll see you in the next video.